Hey everyone, my name's Andy. My channel's Finding Value. I like looking for undervalued investment opportunities. We do financial education here. And today I want to do 25 quotes, this is 25, the top 25 investing quotes of all time. They're from billionaires, and I'm going to go over it with you. I'll give you my opinion on them. I'm kind of going over quotes so you kind of know what the big guys are doing and what they think. So let's go through it together. I'll read some of these off. I'll shrink myself up some and move myself to the right. So here's timeless financial quotes. Benjamin Franklin: an investment in knowledge pays the best interest. Bottoms in the investment world don't end with 4-year lows. They end with 10 or 15-year lows. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. So I think what he means by close the doors is don't listen to anyone else. With a good perspective on history, we can have a better understanding of the past and present, and thus a clear vision of the future. With a good perspective on history. See, these are the best stock market quotes. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much money you lose when you're wrong. Given a 10% chance at 100 times payoff, you should take that bet every time. Sounds like a uranium exploration company. Don't look for the needle in the haystack, just buy the haystack. John Bogle. I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over. Warren Buffett. The stock market is filled with individuals who know the price of everything but the value of nothing. That is 100% true, and that's why this channel is Finding Value. In investing, what is comfortable is rarely profitable. That's about volatility. The more volatile a company is, usually the higher the payout or return is, if they do well and you get the timing right. How many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case. Robert Allen. If there's one common theme to the vast range of the world's financial crisis, it is that excessive debt accumulation, whether by the government, banks, corporation, or consumers, often poses greater systemic risks than it seems during a boom. And that's what I talk about, the boom and bust cycles. It's a leveraging up on the front half, and then the back half is a deleveraging. So it is excessive debt accumulation by some entity on the boom of that big boom phase. And that's what that person's referring to. We don't prognosticate macroeconomic factors. We're looking at our companies from a bottom-up perspective on their long-run prospects of returning. And the reason they do that is you build a company based off, you look at the bottom up, because you don't base a company based off the macro. This company should be surviving through many different environments. And that's why you want to build it up from the bottom up, not the top down. Courage taught me no matter how bad a crisis gets, any sound investment will eventually pay off. Don't be afraid of a crisis. The individual investor should act consistently as an investor and not as a speculator. We want to invest in companies, not speculate. Here's investment and wealth quotes. The biggest risk of all is not taking one. Returns matter a lot. It's our capital. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. That's Robert Kiyosaki. Know what you own and know why you own it. Peter Lynch. He's one of the best returning mutual fund managers. Financial peace isn't the acquisition of stuff. It's learning to live on less than you make. So you can give money back and have money to invest. You can't win until you do this. That's Dave Ramsey. 21, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. And that's what you do. You hold on and do nothing. You just sit there and you're like, wow, this is all you do. And you get to twiddle your thumbs. Top investing quotes from contrarians. The four most dangerous words in investing are, it's different this time. Bitcoin's different. It's different. It's going to go to the moon and never come back down. It is the largest bubble of any bubble. And this time's different. It's going to go to the moon. And maybe it is. Maybe it is. But those four words are the most dangerous words in investing. Wide diversification is only required when investors do not understand what they are doing. And what he means by wide diversification means you buy everything. He's saying find your sectors, find your areas, choose the companies, and then buy those companies. And I agree with him. You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets. Peter Lynch. And the way that I look at it is when you get recessions, that's when you load up. That is when the assets are cheap. You load up when everything's cheap. You sell it when everyone's talking about it. Bitcoin, 60,000. Oh yeah, this is the new thing. Have my tokens or whatever they are. The most contrarian thing of all is not to oppose the crowd, but to think for yourself, Peter Thiel. And I agree with that. And you've heard me say this on the channel before. I don't care what other people's opinions are. If you've got the market conditions, the technical analysis looks good, and you've got good valuations, you sit and hold. Doesn't matter what people say, what they tell you, what you think. Usually what happens that I see a lot in the comment section is a lot of people that watch this channel, they'll watch something from another channel. It'll be like Steven Van Meter, and I have nothing against him. I just think he's wrong. But we got Steven Van Meter. He'll present something, and they'll be like, well, what do you think of this? And then they copy the link and throw it in the comment section. And what do you think about this? And then they copy Lacey Hunt. They'll copy him and throw him in there. And then they'll say, well, what about this one? And they throw that in. It's like, guys, what do you think? I don't care what Steven Van Meter thinks. I don't care what Lacey Hunt thinks. I've listened to those guys. I've listened to them. Some of them, they don't make any sense. I don't believe in the basic fundamentals. I mean, some of them are basically they're saying that there's going to be a debt overhang, and that debt will weigh down the economy because we won't have enough income to pay the debt off. The problem is every single country that's gone into hyperinflation's been in that same scenario. They had too much debt, so they just paid off the debt with issuing more, and then they just blow it all up. Are we going to do that? I don't know. Probably. I don't have all the answers here, but that's what happens. You get too much debt, you can't service the debt, and then you just say, print it. Just go. And we're going to get in a situation that's very similar to that. So we've got these quotes. We've got all these things. And I think most of them are pretty applicable to what we're doing. Investing, being a contrarian, thinking for yourself, looking at market data. And Peter Lynch, there's some things that I've read from him. When you see something growing, I'll give you a company, and it's not a public company. It's private. Chick-fil-A. Chick-fil-A in Colorado, wherever that's at, there's a line literally going around the building. Their lines are so big. They have people walking around with pads. And they're very good. Their efficiency is way up. They come around with pads, they create 3 lines, and they take your order and they walk and take orders, and it just goes straight into the restaurant. They make it right in there, and they just pump through the drive-thru. I mean, they pump it. They are making so much money, it is ridiculous. They smoke everyone else. I mean, I just look at it, I look at all the cars, I'm going, and it moves really fast. So the efficiency per building for Chick-fil-A probably blows everything else out of the water. They are fast, they are efficient, and they get a bunch of people through there per hour. That is one of the best companies that I've ever seen. They're faster than anything. They're probably faster than Amazon. I mean, Amazon, literally you take an order and they ship it. But I mean, in terms of physical, like getting the money right then and there and then paying or getting that product right back to the person, I mean, it is like clockwork. That's probably one of the best companies I've ever seen do anything. Chick-fil-A in Colorado, there's a couple of them, and they just pump people through. So when you see something like that, just put some money in it. Like, you see something early and you're looking around for investments and you're like, wow, this company's killing it. Throw a couple grand in there. And you're like, and just leave it. Don't do anything. Leave it and let it go. You see the little Square terminals that people pay? I didn't know that was called Square. I was like, man, these things are going to blow up. And that was a long time ago. And then eventually it blew up. And I was like, oh, that's Square? I didn't even know it till recently, till I started looking into it. I was like, oh, I knew that. I knew it was going to blow up. Roku and those little sticks, and then they came out with the TVs all at Walmart. I'm like, they're going to blow up. I bought Roku, held that for a long time. That blew up. And if someone can disrupt the real estate business, where I hate realtors. I'm not like against them, but they take way too much money. If there's a way that they can streamline the entire process of buying real estate, someone's going to make so much money. If there's a way they can tie the title together, like you've got the title, you've got the buying and selling, and you've got the interaction between buyer and seller. If there's some way that they can tie all of that together very easily, very quickly, and transfer all this stuff, you can even use blockchain or something like that, that company is going to absolutely destroy it if they can figure that out and cut the fees way down and somehow connect buyers and sellers without agents. Perfect. And charge like 2-3%, something like that. So if you see those opportunities, the ones that are right in front of you, go for it. I mean, that's what I would do, and then just hold on. Don't sell it. If it continues to grow and you see it, don't sell it. Look in your wallet. Oh, Visa, MasterCard. Oh, they're probably going to do well, and they're probably going to do well over the next 20 years. All these companies. If you guys like this content, give me a thumbs up. Thanks for listening. Leave comments below if you have any. This is Finding Value.